you everybody for taking the time to join us. I'm gonna try to make it short and simple so that we're only gonna be looking at a couple of different products today. They're gonna be the home protector and they're gonna be the final expense. But the first thing that I wanted to share with everybody is that the Athens, Greece trip on next year for June 17 and 22nd, just kind of keep in mind that the qualification for the trip is really not that high. Producers 85,000. So if you look at the $85,000 amount on the full year, that we're only talking about $7,000 worth of submitted premium, which is like $700 a month. So it's really simple to get. If you're representing a company, whatever company that is, we're talking about American Amicable right now, but it could be American Amicable, Mutual of Omaha, Foresters, any company, USA. If you're representing a company and you're not going for that trip, you're leaving money on the table. It is more important that you hit a trip with a company than it is for you to have 20 different companies, if that makes sense. And if you hit the trip, it'll make total 1000% sense. Why? Because you create focus, you attract more of the customer that you want to sell, and it's better to go for the trip for whatever company than to have 20 companies to represent. The only way that you will become a $1 million round table producer, if that's your goal, if your goal is to make 100,000 or 200,000 or 300,000 a year, you should be focused on one product and doing it very, very, very well. If you're doing anything other than that, I'm telling you, you're missing the boat. The only benefit is to the companies that you're representing, because they get one policy from you a year. And basically, most of the bigger agencies, most of the bigger companies, guys, if what I'm about to tell you, it's going to make a lot of sense. And it's kind of sad because a lot of the big agencies out there, if they recruit you for Mutual of Omaha, National Life Group, Occidental, American Amicable, any company out there, their goal is for that agency to make you produce one application a year for them. That's right. They want you to produce one application a year, and they call it a day, because they'll make their money. You'll still be broke because there's no focus. You're spread out all over the place, and you don't build any residual. You don't build a solid business. You cannot service your customer, because when they call you to ask you a question, you don't know where to go. So focus and building into one company, and going for the trip should be at minimum one goal. Worst case scenario, you hit the 85,000, you put some money in your pocket, you go free to Athens, you come back an expert. Because whenever you go to a trip, you're surrounded by all these heavy duty guys that give you a lot of insight. So, I have taken and learned more in one dinner in a trip with one person than I have in 3 years out in the market selling. Sitting right next to somebody that can produce 200, 300,000 a year, and they give you those golden nuggets for you to learn, it's invaluable. It'll change the rest of your life. So the trip, exciting. Athens, here we go. So that's one of the things. The other thing that you have to take a look at is that Occidental, American Amicable, has made the system so easy. You can submit your application on a tablet, on a computer, on PDF. You can submit the documents. I mean, 3 or 4 different ways. You can still fax it or mail it, standard mail. So they can receive policies however you do your business. It doesn't matter whether you're mobile, see, or if you use a tablet, a laptop, a desktop, a phone, fax. It doesn't matter what you use. They can help you. They take it any way, right? The other thing that I believe it's super important is that this brochure, Products at a Glance, you should have in front of you all the time. And since we're going to be talking about final expense, you got to look at the Golden Solutions brand. Depending on what state you are in, you're either going to see Golden Solutions or Senior Choice. So we have them both just because the size of our agency. So sometimes you go to work with somebody and they only have Senior Choice. Sometimes you go to work, represent somebody, another agency, they got Golden Solutions. Guess what? They're exactly the same product, exactly the same benefits, exactly the same commissionable premium, exactly the same maximum and minimum face amounts. They're exactly the same, different names. All right, so when I say final expense, I'm gonna refer to Golden Solutions and or Senior Choice. When I refer as to Family Solution, we got Family Solution and Family Choice. That basically tells you that this is product for people 0 to 49. So 0 to 49, that is your target market. They're super flexible. If you have a younger person that's maybe it's not as healthy as many other people, this would be the place. Like we just placed a business in Florida for $20,000, 40 years old, 5'4" in height, and 275 pounds. All day long, simplified issue, like in 2 days. Issue paid program. So this is Family Solution, very good. The other thing that you have to take a look at is that the riders and the simplified issue part of it, it requires no exam. It requires no exam, and it still shows that you need a telephone interview. No interview required. No phone interview required. From about 30 or 40 days ago, there's no interview required in a lot of the simplified issue products. They haven't changed this chart, but there's no telephone interview required anymore with Final Expense, with Family Solutions, or with Home Protector in many cases. So just FYI. The other thing is the benefits, the riders. You know, you call them whatever you call them, but I call them benefits, riders, additional features. So there's no final expense policy out there that has a nursing benefit, accidental death, children insurance, grandkid children, terminal illness, confined care. There's not one policy that has all those benefits. And if there is, you got to tell me, because we would be selling it, right? There's terminal illness, but you don't see confined care benefit. Confined care benefit, awesome. Accidental death, super. Children and grandkids for $1 a piece in a policy, super awesome. Nursing waiver premium. I mean, where have you seen that? And then we have immediate death benefit, graded, and return of premium, obviously. So we have 3 different stages. And that's the product that we're going to look at. The other product we're going to look at is the Home Protector. Most agents get another company, and I'm gonna repeat this because this is key for Jennifer, for Cassius, for Armando, for Russell, for everybody on the call. I'm gonna repeat this because this is super important. Most agents make the big mistake of they go, oh, home protector, I'm gonna sell that term. And then you go and quote it, and they said, yeah, but I'm competing with Transamerica, which is pretty cheap, which has got living benefits. And that's true. But what a lot of the agents don't understand is that if you quote it correctly, you're gonna beat every product in Transamerica, in Mutual of Omaha, in AIG, in Royal Neighbors, and you bring me a deal. You bring me a deal, a term, or universal, or whole life. You bring me a deal, a quote that you quote with somebody, and I'll show you how to beat it with any of our products. To this day, I'm still asking people, show me a product and I'll beat you. But if I beat you, you got to pay me $100 for quoting you. That's the only rule. But no, I'm kidding about the $100. But show me a product that you have, and I'll show you how to beat it. It's not that you need another product, it's that you need to memorize your product. You need to get good at the product. You need to get better. Bigger is not better. More is not better. More products, more companies to represent is not better. Better is better. If that makes sense, guys. So I'm gonna go ahead and move really quick to the quoting process. So the illustrations, you can run illustrations 3 different ways. You can do illustrations by clicking this tab, or download your software here, or ordering your agent guidelines. And if you learned your agent guidelines, you're gonna hit the trip. If you memorize your agent guideline, and not memorize like the medication, height and weight, but memorize the main parts. Now, for example, I'm gonna look at home protector and the final expense. And I'm gonna look at the home protector guideline. So this is a term level insurance, insurance to age 95. It's guaranteed to age 95. If you go to the 4th page, the last paragraph, so let's go to the 4th page right here. And you know that I read it before because, you know, I know exactly where it is. I know what it does. Everybody gets a conversion privilege. Basically says, if you buy the policy today, it doesn't matter whether you get a 15-year, 20-year, 25, or 30 years. It doesn't matter which level term product you get. You still get the same conversion privilege that says on the last year or previous to age 70, previous to insured attained age of 75, you can convert this policy to a permanent policy to no more than you paid today. It's right here on your agent guideline. And then you have return of premium, you have critical illness. Again, this is some of the benefits that ride with the policy, that you can add with the policy, that a lot of people have lose the business because they don't learn the benefits. So on this policy alone, and we're talking about a home protector, and we call it HP for home protector, So we got return of premium. We have a critical illness that you can add. We have a disability that you can add. We have an accident only disability. So we have two different disability types. Obviously, the disability income rider is going to be more expensive than the accident only one for obvious reasons. One is total disability for any reason, and the other one is for accident only. Okay. There's waiver premium. So we have one waiver premium, but we have a waiver premium for unemployment. You don't see policies, guys, that have a waiver premium specific to unemployment. You got waiver premium, big deal. This is now, this is today. You got an unemployment benefit, waiver premium for unemployment. This is what it is. This is nobody, you're not going to find a policy, as far as I can tell, that's got a specific waiver premium for unemployment. You got children insurance. You can add your kids. You can add accident. You can add your spouse. You can add your, obviously it already comes with terminal illness. It comes already on the price with confined care benefit. It comes at no additional cost. Hear me out. No additional cost. 3 benefits. This is pretty amazing. And when I say this, Nikki and Lotus, we get excited about this because this is available at no additional premium. No, free. It's free. This is free. This is something that and it's free. And people say, well, it's already included on the price. Well, no, it's free because the price, we beat all the other competition on price. So yes, it's free. The other ones are overcharging you. That's what's happening. So this is free benefits at no additional premium. We got a terminal illness. Everybody's got that. Fine. We got confined care benefit. So basically, if you're in a confinement situation, this policy will pay you 2.5% of the face for 40 months. That's crazy. So if you have a $200,000 policy, if you have a $200,000 policy at 2.5%, they're going to be paying $5,000 a month for 40 months. If you're in a confinement situation, that already comes with the policy. What else comes with the policy that's already included? We're going to include the policy available at no additional premium is the chronic illness. When we give you a quote on this, it has chronic illness, no additional cost. That's crazy. Tell me another policy that includes terminal illness, confined care, and chronic illness all in one at no additional premium. Doesn't exist. It doesn't. Not yet. Maybe others are coming up with it, but as of this moment, no one has got it. All right, got it. All right, and that's going just a little bit. That's just the first 2 pages of the agent guideline. If you hadn't had a chance to look at it, I would carry the agent guideline with me everywhere I go, and actually, as I am presenting with the customer, that agent guideline would be sitting right next to my laptop. It should always be right next to your laptop, okay? And I tell you why it's important, because if you look at the way they designed the agent guideline, you know, I know that a lot of agents will ask me different questions that they have in front of them, and they waste valuable time asking the questions because they didn't take the time to read. So here's the build chart: height and weight, minimum, maximum. So we can insure somebody up to almost 387 pounds. So we have that. And then the medical impairment guide. So I get this question asked all the time. All the time is like, hey, does anxiety and depression, can we insure somebody? And I said, yes, we can. All right. And if you look at your agent guideline, it says anxiety, one medication, situational in nature. It's issued standard. If it's for depression, major depression, that's the key word, bipolar or schizophrenia, it's a decline. But if they have anxiety and depression, yes, we can issue that. But obviously, we're not going to insure somebody that's schizophrenic, right? That's just what it is. But you have asthma, you know, you have aviation, back injury within the past 12 months, standard issue right here. So it says you can, it tells you, hey, is the life insurance, the disability, so we cannot have disability rider. So you need to get used to your guide and see what it is, but it would decline some of the benefits, but everything else gets issued standard. And then, so we have that, COPD, epileptic people, gout. Gout, it's a done deal, but if it's combined with diabetes, kidney stone, or protein in urine, it's a decline. The key word is combined. So make sure that you guys are good at reading. You know, every major producer reads all the agent guideline. Again, every major producer reads their guidelines. It's okay if you don't read them, but you'll be just an okay producer living an okay life. But if you want to be a good producer, a great producer, then you got to read your guideline. And then over here, the second most asked question is, my customer is taking, you know, Acupril for high blood pressure. Well, it tells you, see below, 1 star, let's go. So if they're taking Acupril and I go 1 star, it says, if control with 2 or less medication, client could qualify for the plan. If control with 3 or more, the client will not be eligible for coverage. Well, what if the guy's taking 3 medications? Well, if the guy's taking 3 medications, it just means that he doesn't qualify for home protector, but he's going to qualify for one of our other products, guarantee you. So this guide, that's why it's so important for you to read all your guidelines for every product, because every product is got different guidelines and different levels, different table ratings. So make sure that you are reading. And just, you know, I read a lot, and when somebody asks me, hey, do they take this medication or that medication, you know, I don't, they tell me, man, sometimes you got all the answers. Well, no, I don't. I just read my guide. That's the actual truth. So glipizide for diabetes. If you're in the Hispanic market, if you're in the Hispanic or African American market, you're going to see a lot of diabetics and a lot of high blood pressure, you know, and that's just normal because of the food we eat. So if they're taking glipizide, it says see below. Well, diabetes, if diagnosed, treated, or taken medication prior to age 35, check this out, age 35, client will not be eligible. In some of the other products, if the client is prior to age 50, he will not be eligible. This one is prior to age 35. So you could have a 40-year-old diabetic and write him on this. So, and then he goes through the whole process, right? Through the whole list of medication. If it's not here, it's a done deal. I mean, I haven't found the case that I couldn't find here. And if I didn't find it here, it was approved, or the customer was too sick to be on the chart, and then we give them a return of premium. The other thing is your medical limits. Home Protector medical limits. It says from 25,000 to 149,000. If you're from the age of 20 to 65, there's no telephone interview required. Simplified issue, you're free to go. You know, pass go and collect your $200 like in the Monopoly game, right? If your customer is between the ages of 56 and 65, and he wants over $150,000 up to $300,000 worth of coverage, then yes, there's a telephone interview that will be required. But that's simple. And usually if you're a 56-year-old person that wants $300,000, you're going to be paying $600 a month anyways. So I don't see a lot of those cases. So that doesn't even, in our market, that doesn't even matter. So it's all simplified issue. It's all here. The other, let's move to the illustration. So the way we go through the illustration, I'm gonna go ahead and try to move. I'm gonna do it online over here. I'm gonna click the tab, illustration, and then I'm gonna move to my Home Protector. And I'm gonna move to, let's move to somebody that bought a house. Let's see, 45-year-old male, non-smoker. And let's look at Texas. So let's look at Texas, and then I'm gonna, let me see if I can close this right here. Let me close some windows that I have open on the top. Sorry. Okay, so now I'm back over here. So if you guys can, somebody over there, just for your sake, as we do a presentation, just grab a piece of paper and a pen and jot down the note, the pricing, so that you know how to become a more efficient writer, a more efficient quoter. Because it doesn't, you know, a lot of people tell me, yeah, I know how to quote. And basically that tells me they know how to click on the calculator. But if you go deep into quoting and understand the customer needs, 90% of the people out there don't know how to quote a simple product. And I'm gonna tell you why. Okay. For a couple of reasons. The agent wants to make more money, but he's leaving a lot of money on the table by selling an expensive product. And I'm going to show you a couple of things. Let's go with a 30-year, 45-year-old male, non-smoker in Texas, 30-year, monthly. And now you can quote 3 different three different quotes at the same time. So we're gonna do 125, 175, and 250. Oops. So we're gonna quote three different amounts, and I'm not gonna put anything over here. I'm just gonna simple quote. So you're gonna get the PDF whenever you run your quote. And now we got, if you look at the quote, all right, check it out. For 125,000, a 45-year-old person, 125,000, it's going to be $84.92 right here. And the policy on the fine print, it says, check this out, okay? It already includes terminal illness, confined care benefit, and chronic illness. It's loaded with benefits already. Confined care, chronic illness, and terminal illness. And the quote is $82, right? So if everybody saw this, then I'm gonna go ahead. So that's for 125,000. Let's move to, and that's for 30-year coverage. So 30 years, right? That was 15 years. The 30 years, it's gonna be 116 for 175,000. So for $50,000 more, you got to pay a little more, but the same benefits. Confined care, terminal illness, chronic illness, all included. All right. 30 years, 250,000. 30 years, 250,000. It's for $162.80. Perfect. And you see that confined care, terminal illness, chronic illness. Perfect. So if you got these pricings, guys, I noted, and I'm going to come back to them anyways, but look at 30 years, 125,000. So I'm going to keep the same coverage. I'm just going to lower the years. So I'm going to lower the years from 30 to 15, and I'm going to see what happens. So the 125,000 went from 84 to 48. Same benefits. And here's the funny part, that you see the guarantee to age 95. Well, we have the same guarantee on the 30-year to age 95, see? So whether you get a 30-year or 15-year, you got the guarantee to age 95. You can convert to a permanent policy at no more than what you're paying today, prior to age 75 or the last year of the policy. So let's look at the other two. 175,000, it's 65. So we went from 116 to 65, and then we went from 162 to $90. And then from 84 to 48. And that's fine up until there. You can save the customer some money and giving you a better chance of staying on the books a lot longer. But here's the other thing. The agents always tell me, oh, well, but if we sell them 15 years, instead of me making collecting on a $1,000 premium a year, I'm going to collect on $600 a year. Well, not really, because if I'm going to lower the to the 15 year with the same benefit, you can go and say, hey, let me have 100,000 of accidental death. Let me have a waiver premium for unemployment. And let me have an accident only benefit for disability. Let's see what he does for $2,000. So let's see what he does. So check it out. 15 years, $83. 15 years, $125,083. Hear me out. This is where the value of quoting is. We originally looked at 30 years, $125,084. Okay, so now we move to 15 years, $125,083. The only difference is $1, $1.70, right? But I ask you, if you're my customer, would you rather have 30 years guaranteed to age 95 for $125,000 for $84, 30 years with terminal illness, confined care, and chronic illness? So I can really say, Russell, hey, Mr. Customer, Russell, if you're my customer or whoever, I'm gonna say, Russell, here's the deal. You could have 30 years worth of coverage, guaranteed to age 95 for $125,000. Your total price is $84 a month, $84.92, and you will have terminal illness, confined care, or chronic illness. All right. Or Russell, you could have, for $1 less, you could have the same guarantee to age 95, $125,000, same guarantee, but I'm throwing some extra stuff in there. So I already told you, you will have terminal illness, confined care, chronic illness. So check it out. So not only are you having terminal illness, confined care, chronic illness, but we're gonna add 100,000 of accidental death. We're gonna have a disability. If you become in an accident, we'll pay you $2,000 a month for up to 2 years. And then we're gonna have an unemployment benefit. Yep, that will take care of your premium every year if you become unemployed. If you become unemployed, right? So now you have, instead of 3, now you have, on top of the 3 main benefits, now you have unemployment, accident, and disability. I'm gonna open up the mic and see if anybody's got any questions up to right here. Anybody has any questions? Mr. Customer, we got 15 years, $125,000 for $97. And originally we had quoted 30 years, $125,084, right? 3 main benefits: terminal illness, confined care, and chronic illness. All right, perfect. So now I can say, for an extra $10, Russell, or $12, for $97 a month, here's what we can give you. We're gonna load it up. This is like the Mercedes-Benz of the policies. And I'm not talking about the CLA class. I'm talking about the SL 550 Maybach Edition Mercedes, right? This is the Mercedes of the policies, and not the cheap Mercedes, the expensive Mercedes. And we're gonna go, I'm gonna give you terminal illness. We already said that. We're gonna give you confined care. We said that. We're gonna give you chronic illness. We said that. But on top of that, we're gonna give you critical illness, and we're gonna give you $31,000 if you ever have a heart attack, stroke, invasive cancer, kidney failure, major organ transplant, terminal illness, paralysis or blindness, and or HIV. All right, we're gonna give you an accident only disability for $2,000 a month, right? And we're still left the accident death for $100,000. So now we're gonna move the same thing works for the final expense. For the final expense, which is called Senior Choice Golden Solutions, again, I'm gonna do one 57-year-old person in Texas, and it's the power of the quote that's gonna give you leverage against any company over there. Check it out. So if you go over there, and I'm gonna close some of my quotes over here. Okay, so we could do $20,000 for a senior, 57-year-old male, non-smoker, simple. So we're gonna issue a quote that basically says 57-year-old male, non-smoker in Texas, $20,082, $82.41. But then it's gonna have the terminal illness and the confined care that will pay them 5% a month of the face value for 20 months. So on the whole life, on the final expense, it pays for 20 months at 5%. On the term, it pays, on the term and universal life, it pays 40 months for 2.5%. All right. So we can say this, hey, Russell, we're going to take care of you, $20,000, $82.41. You get confined care and terminal illness. Perfect. So you can do that. Most everybody does that. The way I do it, the way I present it to my customer, I go, hey, let me give you a little bit, 12,500. I'm just going to give you 12,500, and then I'm going to give you 5 grandkids at 5,000 apiece. And I'm not telling the customer the way I'm quoting, because I'm quoting it. I am the doctor when I'm in the house. I'm not asking for permission. I'm telling the customer what we got to offer. So Russell, if you're my customer, or Lotus or Nikki, if you're my customer, I'm not telling you, well, do you think you need nursing? Do you think you need accident? Do you think you need grandkids? I'm not asking you for that, because then I'm confusing you, because you don't even know how the benefits work. So the way I do it, I place it and I say, hey, I'm gonna do 12,005 in coverage, 12,005 in accident. I'm gonna add the nursing, and I'm gonna add 5 grandkids. And I'm gonna say something like, and you tell me, Russell, which one sounds better. So pay attention over here, if you can. Pay attention, and you tell me which one would look better. I can say, hey, Russell, we can give you 20,000 for $82.41, and you will have confined care. So if you became confined, you'll get 5% of 20,000 every month for 20 months. Or basically, if you're confined, you get $1,000 a month for 20 months. And if you get a terminal illness, we'll advance 100% of the benefit. Perfect. Or Russell, you can save over $20, and I can give you $12,500 in face, $12,500 in accident benefit. I can give you the terminal illness. I can give you the same confined care, and I'm going to give you a nursing benefit that basically, if you're confined, obviously you're going to be in some type of nursing situation. So not only are we going to pay you 5% of the face amount, but you're not going to be paying for the cost of the policy. And then if something happens to you in the midst of an accident, we're going to add an additional $12,500. And by the way, do you have grandkids? And usually the answer is yes, I got like 20. Well, pick your best 5 or your favorite 5 grandkids, and we're going to include them on the policy for $5,000 a piece. So what are we giving you over here? We're giving you $12,500 in face, $12,500 in accident. We're giving you $25,000 in grandkids, right? That alone is $50,000 of combined coverage, plus we're giving you nursing, accident, grandkids, and you still get the confined care and terminal illness. So we got plus, plus, plus. What do you think? What do you think, Russell?
The second option sounds good.
Yep. Yep. And that's really where it is, because you're saving $22. You're getting, 3 times the benefit.
Right.
And not only will you be able to use it, but unfortunately, this is very unfortunate, that whenever we insure grandkids, we pay more benefits on grandkids than we do on the actual granddads or grandmothers. Okay?